GM, welcome to another episode of The Roll-Up. Today we have the pleasure of speaking with Akshat, Chief Investment Officer of Maelstrom Fund, which is Arthur Hayes, the notorious founder of BitMEX family office. Arthur and Akshat work closely at Maelstrom, and today we dive into the investment theses of Maelstrom, the time horizons, and some industry trends as they're unfolding in the market today. Hope you enjoyed today's podcast. Before we get into it, a word from our sponsors.
Mantle is a layer 2 blockchain with one of the biggest on-chain treasuries in all of crypto, and they have a 100-day campaign called Metamorphosis live now. What this is it is a campaign for their liquid staked ETH token, METH, as well as their upcoming liquid restaking token, CMETH, where you can utilize this token on the Mantle network in a variety of different apps, some of your favorite restaking protocols and DeFi protocols, and earn yields in the form of powder, which will eventually be turning into a governance token. Mantle's been around for a while. We like them because they use their own form of EigenDA. They have a good ecosystem and they're growing. So check out this 100-day Metamorphosis campaign, and hope you guys enjoy the rest of this video.
Welcome aboard on our journey into the singularity. This is the endgame roadmap for Frax and Fraxtal, the new L2 out of the Frax ecosystem that is totally based on fractal scaling. Fraxtal is a modular L2 blockchain built by Frax with modular and fractal scaling in mind. Fractal scaling is based on the Mandelbrot set of fractal images, and it explains how L2s become L3s and the entire app chain lifecycle goes through its evolution. The Frax ecosystem is made of some of the top builders in the space and has stemmed from its OG days of the Frax stablecoin. It is now in the LST space, the LRT space, and this Fraxtal L2 joins the existing suite of Frax products, including Frax Swap and Frax Lend. You can see Frax Ferry, the bridge to go from any chain, Arbitrum, Optimism, or mainnet into the Fraxtal mainnet. Bridge your tokens and bring your Frax assets into the Fraxtal ecosystem. Join today to get the best out of Fraxtal. You are still early. Join today. Take part in our expedition into the singularity.
GM guys, welcome back to the roll-up. Today we are chatting with Akshat from Maelstrom. Maelstrom is the family office for BitMEX, former CEO Arthur Hayes, founder of BitMEX, the notorious perpetual exchange with 100x leverage. If you're an OG, you remember. And now Maelstrom, and Akshat is running Maelstrom. So absolute pleasure to chat, man. I'm glad that we can make this happen.
Morning, good to be here.
Yes, it's good to have you. I think there's plenty of things that have kind of taken wind over the last few weeks and months. So I'm excited to dig into it. But actually, before you joined, I was looking at what is going on with Tron right now. Do you have any idea why it's catching so much wind?
No, to be honest, no, not really. I think I've been in Asia for 5 years. The Tron ecosystem has a dedicated user base that I don't encounter. I don't know who they are, but I know they're around here in Asia. So no answers there. More questions for me as well.
It's strange, man. I guess just His Excellency that has been able to build an empire and a loyal user base. I think just out of real user traction, they've been able to find some stablecoin product market fit. Honestly, I don't know anything about their DeFi ecosystem. I imagine, from what I've heard, they have kind of the normal DeFi components, but beyond that, it seems like they've just kind of found a regional fit and a product market fit. And then every once in a while, because they're pretty steady as it goes, when everything else tends to recede, they end up just kind of cutting through the noise.
Yeah, no, I think so. I think, crypto finance reflects old school finance where it's all about whales. So as long as there's a tight network of whales who speak to each other, it's not that difficult for a project to kind of keep its loyal base together.
And I think I come from the Western world. What is kind of like have you seen any very common threads, or is there a divergence, would you say, or a convergence between Asia and the Western world and its perception of crypto these days?
Yeah. I mean, perception kind of depends who you ask. So, regulators, now we're seeing kind of things flip the other way. There was a point where Singapore, Hong Kong, et cetera, were opening up in terms of regulations. South Korea has always kind of been there. Now you're seeing kind of a little bit of a pivot in the US at least. But there's a lot of uncertainty there as well. And in Asia, you've seen a little bit of a reversal. But even within Asia, there's some disparity. So Singapore, after FTX, kind of started closing up to crypto. Hong Kong saw an opportunity and now has been opening up. So it sort of depends where within Asia. Asia is pretty massive, and each country, is the size of a U.S. state or more sometimes. And the biggest one, obviously, China, isn't really right now. Crypto is still, who knows? It's been banned a million times and unbanned-ish. So no one really knows what's going on there. But massive difference for sure in terms of the trajectory. I'd say the biggest trend, though, that you can really point to is in the West, there is, at least in the US, there is some consistent trajectory and trend. And in certain Asian markets, let's say excluding South Korea, it kind of flip-flops just depending on, what the local autocratic government feels that time of day.
Okay. Kind of a fragmentation. Yeah, okay. Maybe we'll get into that a little bit more into the pod, but it's your first time here, man. So again, yeah, thank you for making the time. And like you said, you're in Hong Kong now, but it didn't start out that way. And since this is your first time on the channel, I'd love to kind of get your backstory. How did you meet Arthur? And then ultimately, what has been your journey through crypto, and how did you end up where you are now?
Yeah, for sure. So I graduated from undergrad in 2013. And, at that time, my friend, who's now a crypto VC, but neither of us were back then, he sent me an article from, it was either Salon or Slate, I don't recall which one, about Bitcoin. It was summer of 2013. I remember just reading about it, and there was a whole section on the Silk Road. And I'm from Austin, Texas originally. I remember thinking, wow, this might be one of Austin's most successful startups, the Silk Road.
Was Ross from Austin?
He was either from Austin or based in Austin, one of the two.
Okay.
And I just thought, wow, that's really cool. And my buddy who sent it to me, who's also from Austin, it sort of spoke to me. I just thought, wow, this fits a certain libertarian set of ideas I've come closer to that I was exposed to in college. And then I just thought, okay, look, my net worth is negative at the moment. Got student loans, but fuck it, I'm making an income now. I'd like to diversify my portfolio beyond just the traditional assets, and I thought I'll take a position in Bitcoin. So I started buying in towards the end of 2013, beginning of 2014, and then I got caught in there was a crash. I think Bitcoin was at something like $1,100, and then it crashed to the 200s, 300s for a couple of years. And I remember sort of just writing it off, thinking, okay, fun experiment, but whatever. I don't really understand what I bought. I just thought it was a cool concept. And then in 2016, 17, I started reading about Ethereum, and just reading about the ideas before just aping into the coin. And that's when I really got, enlightened to the possibilities that you can kind of keep stacking on to blockchain technology. And it starts with just the distributed ledger. All the other stuff on top of it gets way more exciting. The leaps are manyfold each time. And I started buying into Ethereum around 17. And again, same thing, there was the white paper bubble in 17, 18. A lot of I put in money into projects where there was no governance, team was garbage, just nonsense. But I also kept my holdings and kept doubling down in Bitcoin and Ethereum. Glad I did that. Learned a lot. At that time, I was working at a private equity shop. My day job. It was really good training. Learned a lot, but mind-numbingly boring to invest in these old school businesses. Growth is 4 or 5% a year. There's not that much to be done as an investor. Can't really help that much. It's very formulaic as well. Did that up until 2019, and then the cognitive dissonance just got too big between what I was getting interested in on the side and what I was doing for my mainstream full-time job. And so I started looking for jobs online, and I wanted to combine my interests, crypto and VC. I'd also spend a little bit of time in Asia, but that wasn't like a high priority at the moment at that time. Then found a job listing that was BitMEX Ventures. That was about early 2019. I remember it said on the listing that they weren't going to take candidates who weren't already based in Hong Kong. I was in Chicago at that time, and I thought, okay, whatever, I'll just apply. And got a response after maybe 3 months. I guess they couldn't find someone that they wanted, and then got the job in the interview process. That's the first time I met Arthur, and we happened to have gone to the same undergrad, but a few years apart. And then I moved out to Hong Kong in 2019 to start working at BitMEX. That's when I first started working with Arthur. So then, yeah, from there, from 19 to 2022, I climbed my way up. I became head of corp dev at BitMEX eventually, worked more closely with Arthur and the CFO, who's now the current CEO of BitMEX. And then in 2022, Arthur and I started formulating the idea behind Maelstrom and how we could kind of take the next evolution of BitMEX Ventures, which we sunsetted in 2022, and bring it to, kind of like the state of crypto today. So that's how it all got started.
Very, very cool. And maybe we won't spend too much time on this. We'll keep the rest of this conversation pretty focused to Maelstrom. But what is the state of BitMEX nowadays? Through kind of undergoing its changes, through the cycles, with Arthur kind of stepping away a bit. Like, what is kind of like, the state of BitMEX nowadays?
Yeah, so I left BitMEX in 2022, so it's been a minute, about 2 years. But as I was on my way out, BitMEX was the OG. They kind of didn't quite invent the perpetual swap product, but basically commercialized it for the first time in the crypto industry. And when I joined, it was still in its heyday. At that point, it was, I don't remember the numbers now, but it was majority of the world's volume in terms of crypto, in terms of dollars notional at least, for a while. So from 14 to 19, that was kind of the case. 2020, situation changed a little bit, and there was that's when Arthur had stepped away around that time frame. But he was already transitioning before that, and kind of knew that the founding team that takes it from day 1 to day 2 is not the same team that's going to take it from day 2 to day 10. So he'd already been transitioning well before that, but the transition started to happen in 2020, and then the BitMEX story kind of like changed from incredible growth to sort of I guess combating off new market entrants who basically copy pasted the product, which that's totally reasonable. It's not a knock on them. Binance, FTX at the time, a bunch of these guys started popping up with the same product, and then it ended up being BitMEX was focused on being this derivatives exchange for prosumer type traders. What started happening in 2020 around the time of COVID and DeFi summer was that retail started coming in. Retail doesn't really want to deal with a perpetual swap product without first figuring out how do we even get this coin. So they needed spot offerings, which BitMEX didn't have, and that ended up being really beneficial for the likes of FTX and Binance, the other guys who started taking a bite into BitMEX's market share, and then that transition, you could see it happening every month from 2020 for the next like year and a half or so, and I'd say since then, FTX is now gone, which makes sense. They were based in Hong Kong as well. We kind of tangentially knew a lot of the folks that wasn't that surprising it went that direction. But I'd say since I've left, from what I understand, BitMEX is kind of like in this more focused mode now, just focusing on its prosumer traders and not trying to like overly diversify into other products as well.
You were, like you said, you were there in the heyday. Like, do you have any war stories about, like, I've heard crazy things about the BitMEX office, sharks and an aquarium, and like, is any of that real? Like, what do you have it? Yeah, like any war stories or just
I mean, it was a wild time in 2019 when I joined. We were hiring some really high profile people, the former CEO, C-suite level people from TradFi in Asia, and the office was incredible. It was in this building that was kind of like a marquee tier 1 building in the space, in the actual the neighborhood called Central in Hong Kong. And I think at one point there was an article that went out around the time I joined that BitMEX was renting the most expensive real estate in Hong Kong, which kind of implies the world, which that just blows my mind, that it was that a business could go from startup in 2014 to being so profitable that it could rent a space like that, and I think it helped morale quite a bit. It created an environment where during COVID, a lot of folks who were work from home, people wanted to come to the office or dying to, because it was such a fun place to be. There's an electric atmosphere. There were a lot of really cool just like aspects to the office that you mentioned. There was an aquarium built in with sharks in it, and it sounds like this supervillain kind of thing, but it was actually kind of like a charitable endeavor to take care of these sharks, and then kind of put them back in the aquarium when they grew up a bit, and it was almost sort of like a fostering program. And there was an amazing bar that overlooked most of Victoria Peak, which is kind of this iconic peak in Hong Kong that's been associated with good times in Hong Kong for about a century. So yeah, fun memories of that for sure.
Vertex Edge is now live on Say Network. Say users can now trade 50 plus spot and perp markets with the unified order book liquidity of Vertex Edge across Arbitrum, Blast, Mantle, and Say. The next 6 weeks, 850,000 Say tokens will be up for grabs as trading rewards every single week, exclusively on Say. Join Vertex on Say Network now on Vertex Edge. That's vertexprotocol.com.
Everclear is pioneering the clearing layer. The clearing layer can almost be thought of as Splitwise when you go on a trip with friends, but for the blockchain. What I mean by that is when users are sending cross-chain messages, there's oftentimes fillers and solvers who have balances left on different chains that they need to rebalance and reset their positions. This is where Everclear comes in. Everclear is pioneering a collaborative approach to the chain abstraction future, and they are willing to work with interoperability partners, solvers, and other providers in the space to build a interoperable and chain abstraction future. Check out Everclear at everclear.org, and welcome back to the roll-up.
That's awesome. Absolutely awesome, man. And one more question on this tangent, which is like, how do you think the company, like you said, going from a startup in 2014 to very, very profitable in 2019, 2020, why do you think, what do you think led to like the culture? Like, how do you think it was so successful in breeding this culture that, again, people working from home, they wanted to come in? Why do you think it was so successful in creating that culture?
I think it started from the top down. There was the C-suite at BitMEX in the early days. They were extremely humble, and anyone who spent time with or met Arthur and other folks in the BitMEX C-suite in person can attest to they'd never feel like they're talking to someone who's untouchable or out of reach. There was kind of this like, I'm not trying to throw shade, but there was this like FTX Bahamas thing, this allure, only the selected get invited. This is like some elite thing. Everyone was dying to be there and trying to, kind of fanboy, fangirl, groupie-esque climb their way into the scene. BitMEX never had anything like that at all. Anyone who's ever been to a conference knows you can just show up to an Arthur Hayes party. You can give him a high five. It's mad chill. That's how the company was run as well. There was never this like little cabal of like, 3 people who run the show and everyone's dependent on how the mood of one dude. It was a very humble and equal atmosphere where everyone felt included. He had customer service reps through CFO, just chilling every day, socially and work-wise, collaborating. There was this egalitarianism that just instilled in this this culture in everyone where I matter and what I do matters. And I think that was the basis of what went well from 2014 through 2020.
It's epic. Yeah, that's really cool and egalitarian, almost more of like a meritocracy rather than like this elitist like if you're not in the polycule, like we don't want to talk like vibe that FTX might have had. Very much not the case at BitMEX. So very cool.
Yeah, that's what went well for sure.
Yeah. All right. So let's talk a little bit more about Maelstrom. And but you were part of BitMEX Ventures, which wasn't really the core business of BitMEX, but like very very close. And so maybe talk us through like the transition of BitMEX Ventures into Maelstrom. How did you and Arthur, what were some of those early conversations like that ultimately led to the thesis that Maelstrom has?
Yeah, so BitMEX Ventures was very much a corporate VC arm, just like in the world of Binance Labs or OPCAT Ventures, whatever. There was often a strategic angle required for every deal. So, yes, will this make financial money? That was the kind of the main criteria, but secondarily, will this add some other value that isn't maybe financial or monetary, at least in the short run for BitMEX, that later BitMEX can harvest in 3, 5, 10 years. It was a little bit more of a traditional strategic corporate VC model. In 2022 summer, when I was chatting with Arthur, hadn't worked with him that closely at that point in time. Just kind of like in larger settings, but I hadn't done a lot of one-on-ones with him. I pitched him on this idea of, BitMEX Ventures is a little bit outdated for this next phase. What if we were to take the same resources, staff, capital, etc., and try to build something that really no one else has the ability to do in the world, which is a 100-year portfolio. So this idea of let's look at stuff that like you have two things that very few people have, which is like the assets of a billionaire as well as time, as a very young billionaire. We could look at assets that right now are very underpriced, extremely early. At that time, AI was not quite a buzzword yet. Things in life sciences, things like water rights, even just unique offbeat assets that are just too difficult for most investors to even fathom touching at the moment. And obviously crypto as being at the cornerstone of that. That's what I pitched him on. He was like, that's a really cool concept. Let's just do what we do well and focus on crypto. So scaled the whole vision back, and I'm glad we took that path because it's gone quite well. With Maelstrom, we focused on investing in early stage crypto businesses. We typically target very early stage, so like seed, Series A, maybe. It just depends on valuation. Kind of depends on what investors are calling Series A at the moment, at the time. But we typically aim for 1% ownership, and we like to help companies grow alongside our investment activity. Given that Arthur was a founder who's built a company himself, we like to impart that knowledge on founders and help them grow, not just like kind of take a back seat. So that's sort of the broad mandate, and things have evolved a little bit since then.
Yeah, and it gives founders a valuable opportunity to get access to that very lucrative knowledge and experience. And I think it makes a ton of sense, and it speaks volumes. You come from this traditional private equity background where you said it was very formulaic, and that kind of stuck with me when you said that, because now you're in this VC world that's like artistic, like you said, like off the beaten path. You're you have a lot more creative autonomy when you're constructing this portfolio, like to the extent of almost like an artist, where you're painting this picture that is a vibrant picture over the next 100 years. And so on Maelstrom's website, you kind of have these three core pillars: entropy, which I want to spend some time talking about entropy and like what that means in this context, and then trustless decentralization and new models for internet monetization. So with kind of leaving aside the second and the third one, I just want to ask you about entropy and like what does that mean in context for this venture portfolio?
Yeah, I mean it's a philosophical concept, right? The three in order kind of like starts most philosophical and broad and goes more narrow and concrete. Like the concept behind entropy is just that we're entering a world where there are fewer gatekeepers, and that impacts everything from geopolitics, finance, information flows, even culture, right? We're seeing, for example, the world of these KOLs, as we call them in Asia. I don't know if I believe that's now become a crypto term globally, but influencers, right? Now becoming gatekeepers of culture even, and they're getting smaller and smaller every passing decade. In China, and some of these markets where people have been, the economies have been built and grown up at a time when social media was a thing. Now you've got these micro influencers who literally will have like a few hundred followers who pay them, and then maybe another couple thousand followers, and they're building a life around that. You're seeing that probably going to happen in the West as well, in the US. And I think that's just like an example of how we're entering a more a world with more individual nodes, rather than highly concentrated pockets of power, capital, influence, etc. Entropy just reflects that.
Do you think that's a one-way street? Or like, do you think we're in like a monochromatic, ever increasing level of entropy, which kind of like gives way to this constant unbundling? Or do you think at times it ebbs and flows? We get this unbundling, like higher entropy, but then we get kind of like the lower entropy, like rebundling, and things tend to consolidate again, depending on maybe certain factors, natural or market. Do you think it's monochromatic and we just constantly unbundle, or do you think we will kind of go through these cycles?
Yeah, I think it is sort of like it's one of those things where it's a spiral, right? So things will look like they're moving one direction and kind of pull back, but there's still a general trend. It's still in the long run trending in a certain direction. And you kind of seen that for the past few thousand years of human history, that while things rhyme and okay, yeah, you see a pullback, generally there is a direction for most things. And it's, yeah, basically entropy.
Yeah, I tend to agree. I think we do see like these, yeah, and then constant unbundling, decentralization based on economic and natural factors. Maybe there's like a spike of low entropy, rebundling, kind of consolidation to like lower risk or I don't know, more known, and then people start to branch out to the fringe again, and we decentralize and unbundle. Because I tend to relate this entropy decentralization sort of patterns to like the modularity narrative, which was pretty popular there for 6 months or so. So I'm curious if you have any opinions on like some of these like modularity as an example, and then I also want to ask you about narratives and trends that you think might stand the test of time, these timeless ones that might last 50 to 100 years.
Yeah. I mean, if you look at like Web 2, right, initially, it felt like this is a decentralizing force back in, or even earlier than that, Web 1, really, when you were using the internet in like 1995, 6, 7, and it was impossible to find discrete pieces of information. It was kind of for fun. You felt like you were exploring some new planet, and you'd have to bookmark things because it was impossible to find things again. That's even like e-commerce websites. It was just there was more of it felt like this is likely going to decentralize the world. And if you had taken a snapshot in 1998 internet and, kind of like try to build a trajectory off of that, you'd probably make some pretty incorrect assumptions for the next decade, right? Because in the end, it ended up becoming basically about 4 or 5 companies. But you're probably right in the next 50 years. So it sort of just depends on your horizon. And I think the same is true in crypto, where things move a lot more quickly in crypto. You got narratives that last, like you said, 6 months to 36 months. And you've got forces initially. You look at Bitcoin, you talk to people who initially got into it in 8, 9, 10. They kind of envision, okay, crypto is going to look a certain way. It's going to become increasingly decentralized every passing year. And then you see very centralizing forces all of a sudden build businesses, and then some of those collapse. And then it goes to decentralizing again. Right now, we're kind of in a phase where some sexes went down a couple of years ago, and DEX volume is at close to all-time highs in terms of relative to sex. And that that we'll likely see a pullback again. It's kind of just like this process, as you say, and it's really hard to make investment decisions if you don't know what your horizon is. So if your horizon is just a couple of years, then yeah, you're going to look at, okay, what trend am I seeing for the next couple of years versus 5 to 7 years? And Maelstrom is built in a way because we don't have LPs. We can look at multiple horizons at once and kind of like in our minds have our portfolio constructed in a way that has different streams. So we've got the 10-year horizon, we've got the 5-year, and we've got the 2-year, and different deals, kind of fit in different buckets.
And so when you're kind of like making these forecasts, and you mentioned that there were like some centralizing factors. We're seeing BlackRock and VanEck and like these ETF issuers start to kind of like grab up a lot of the Bitcoin that's on the open market. US and El Salvador, like countries, and putting it in their treasuries as well, is just gurgling up like all of this Bitcoin. Do you think that poses a systemic risk to Bitcoin's longevity, 20, 50, 100 years forecasting out? Like what do you think are kind of the knock-on effects of these centralizing forces on the Bitcoin supply?
Well, I think what works well with Bitcoin is that it's basically a very simple piece of tech that relies heavily on game theory and psychology. So if you are a country and you know that one of the world's richest, most powerful countries might be adding this to their treasury, then that initiates this process. Now there's some 180 other countries out there who are like, well, why would I not want to front run this? And smaller, leaner / more autocratic countries can move more quickly on that. And so that just as an example, if the U.S. let's say Trump wins, then it's going to take some time for the U.S., if at all, if it's even going to happen during Trump's reign, which who knows. But if the direction of travel looks like eventually there's going to be some kind of strategic stockpile that doesn't get sold, then yeah, other countries start doing it between when the election is announced and Trump takes office, and then the many years it'll take after that for something like that to actually come to fruition. So I think there are, in terms of like at least centralizing forces, there are these counterbalancing decentralizing forces built into how it was designed. So I think while might be a short-term risk, long-term, I don't see that kind of factor playing into its potential, demise.
It's like nuclear weapons. Like once one country has them, all the countries want them, and then there's this strategic alliance that's formed, and it changes the landscape of how these countries interact with one another to see which one's going to deploy and how that economy is deployed. It's kind of up to one, from what I'm hearing, and I think to just extend this like nuclear weapon analogy, like it's kind of up to one country to sort of determine, and then we'll see if other countries follow suit with similar technology.
Yeah, I mean, you see it even with like funds. It started with just individual people right back a decade ago or so. Now you're seeing with funds, you kind of need some crypto exposure. It's sort of pension funds and family offices, folks that would never touch this thing even 2 years ago are now getting exposure. You're seeing it more increasingly disclosed in more balance sheets, in public, income statements and balance sheets that are public reporting for companies that are publicly listed, and it's just like spiraling out into this thing where you can't not have exposure, and eventually that will extend to some of the largest and most strategic holders, like you said, governments.
Yeah, I'm curious how that'll change the dynamic of things, and like you said, the game theory and the psychology of holders and then active participants in the ecosystem that are looking to maybe use Bitcoin and like use Bitcoin on Bitcoin rails, or if these actors that have large stockpiles are going to transact with one another rather than using the chain.
It might reflect the initial adoption of gold, right, back in the day, where it wasn't immediately clear that gold was going to be the store of value. Many centuries and millennia ago, salt at one point was one of its main competitors, and different spices But it's sort of in the end for reasons that are unique to properties of gold, it ended up making sense for that to kind of become the global standard at some point. So the process to get there was messy. It was not like a clear thing. Yellow shiny rock is the most valuable thing on planet Earth. That sort of came about over time, and I imagine the journey for Bitcoin will look similar.
How are you guys viewing the Bitcoin ecosystem around the asset? Bitcoin L2s. I've seen Arthur make some claims about some of these Bitcoin NFTs, and so when you're how are you thinking about the Bitcoin ecosystem besides BTC?
Yeah, I think that became like a VC meme maybe in the last 6 to 12 months. This everything that happened on Ethereum based and smart contract based DeFi, it's all going to get ported over to Bitcoin, and we'll tap into the liquidity of Bitcoin. There's a lot of Bitcoin sitting idle. I think there's probably some truth to that. Yeah. If there is some truth, then that means we need exposure because we're an asset manager, and so our job is to not miss anything. It's much better to do 10 deals that go to zero than miss one that goes to $1 billion. So we're going to get exposure to everything, and that's how a lot of VCs operate. So when there's a VC meme, it doesn't necessarily mean that VCs are firmly in agreement with one another that this is going to win. It's more like this might win. Now we need exposure, and we take a similar mindset. But I think the basic concepts are true. There's a lot of money that's being underutilized sitting in the Bitcoin world. There's a lot of infrastructure that's missing that now, because of certain upgrades that are planned or have already happened, is possible to build. So give it a shot. I think Ordinals is a good example of how that can be fun, and we're kind of co-spearheading a project with one of our portcos, Oil, to kind of show what the capabilities of Ordinals are, and bring some of the fun and degen-ness back to Bitcoin, called Airhead. And I think on the DeFi side, setting aside the NFT world, there's a lot that's going to be replicated on Bitcoin, and we're starting to look at and back players in that space as well, from the L2 space to yield on Bitcoin, etc.
Very cool. And you guys have I saw on your website you guys have this Bitcoin Developers Grants program, and StarkNet actually has like this $1 million research grant for research on making a Stark verifier on Bitcoin. I'm curious, do you have an opinion on OPCAT and how you see that progressing?
Yeah, I mean, so BitMEX was one of the larger Bitcoin ecosystem grantors back in the day, and this is just kind of continuing that tradition. So just I mentioned the Airhead Ordinals project. 100% of what Maelstrom makes from that is going towards that grant. Nice. So that's why those two things came out at the same time. So we're not actually making any money on the Airhead thing. We'll see on OPCAT. Your second question, I think it's a lot of things that have to align, a lot of uncertainty. Something like it eventually will probably come to fruition, but at the moment, it looks like there are some barriers, and we're not making any bets. We're not betting on any business models that rely too heavily on that coming together.
So really? So we did an entire educational series on the roll up called Bitcoin and Beyond. We tried to talk to as many Bitcoin L2s as we could. I asked all of them, I don't want to name names, but because people are weird about, their political affiliations, but all of them said that they support it. And so maybe that's pretty obvious. Bitcoin L2s want it. It helps their technology and their security models. But who, and I actually have started recently asking them, okay, you support it. Cool. Makes sense. But can you even articulate an oppositionary agreement to it? I can't, who opposes OPCAT, and what's the argument against it these days?
I would think if I were an OG miner and, stuff has worked, don't tinker with it, right? It's like if someone goes into, you've got a massive vault of gold, and you're one of the richest men in Venice, and now someone's like, hey, I want to re-engineer your vault. Let's not do that, right? It's like, why? I don't have a huge incentive to innovate here. Maybe some of you other guys who want to create value and create new business models, and you want to create your massive vault of gold. You guys can do stuff, but not with mine. So I think there's some of that. It's a variation on NIMBYism, kind of. Okay. That like, yeah, don't innovate with stuff that has already been working quite well for me. I believe that's where most of the opposition is. But I can't. Yeah, okay. I couldn't articulate like why, from a technical standpoint, don't do this. Don't advance our space, at least our category within our space, because I don't think there is a strong one.
Yeah. Okay. Well, I'm gonna keep searching until. Yeah, because it seems like complacency. If it ain't broke, don't fix it. But this is going to become a problem in the next. I don't know. Some people say 2 halving cycles is when the security budget's going to like become a real problem for miners. So yeah,
then they'll be forced to act. Then they'll be forced to act right at that point in time.
Yeah,
and it'll be with less planning. It kind of sort of resembles the government shutdown sort of thing, right? At some point, you're just forced to do something, and then you kind of get it done.
Mm-hmm.
So it might look something like that.
Yeah, very reactionary. There's plenty of incumbents that do act that way. Cartesia is your home for app-specific rollups. At the forefront of developing new tools and platforms that enhance the capabilities of blockchain technology, Cartesia enables applications that are flexible and built to scale. Build on a full Linux environment and use traditional software libraries, but in blockchain development. Go to cartesia.io, that's cartesia.io, to learn more about building your own app chain today.
Covalent is solving the long-term data availability problem where a lot of the data availability providers today in the modular space, when you post data to them, they actually only hold that data for about 12 to 16 days. And then it's basically, it can go into an archive node, or oftentimes it's just kind of put away into the abyss. And what Covalent's trying to do is build this long-term data availability solution, which can plug into some of these modular data availability providers and provide this longer-term perpetual data solution. So what we try to think of this as is when you post transaction data onto Celestia or Veil or any of these modular DA solutions or even Ethereum, Covalent is able to provide a long-term data storage and data availability platform for that data after the time period. Blockchains are billboards, not databases, and we need these providers in the space to be able to kind of hold on to the long-term data that is provided from these providers and these blockchain state. This is where Covalent comes in. They just had a nice rebrand. Check them out on Twitter as well as the website. Thank you for being here. Hope you enjoy the rest of the show.
Cool, man. Well, you also mentioned kind of like a VC strategy. And so, we've got tons of listeners all across the docket. Like, developers use this as their research into a particular technical, design, but VCs also look at this podcast and, use it for due diligence. And so I'm curious, you mentioned kind of like this, the rogue term is basically spray and pray, but basically have allocation and exposure across like all of the potential winners. Even if most of them go to zero, it's fine because you won't miss out on the one. And then I've also heard like, don't diversify, just, find due diligence, do research, have conviction, and go deep into the ones that you do have that confidence around. So how do you weigh some of these different philosophies? What has proven successful for you guys, and ultimately, how do you, what's kind of your criteria when you're looking at something and you're like, maybe this has like the risk of going to zero, but we don't want to miss out. It could be a winner. What goes through your mind on making those decisions?
Yeah. I think I generally agree that funds need to be focused and kill it in a space that you understand deeply, because you'll be better placed to make bets in a category that you really understand, or you're really uniquely well networked in, or you have some strategic value, and that is a differentiator. So in a world where if every fund just looks like an ETF of the space, then it's not really going to work, right? You're not going to make returns that anyone else couldn't just easily make. That being said, your investment fund also has to reflect the maturity of the industry itself. And at the moment, there are a lot of categories in crypto that have popped up where if you said, no, I'm only focused on interoperability, so I'm not going to touch, stablecoins, but you have, an opportunity to invest in one because there, let's say a couple of years ago, there weren't that many investment funds, then you'd be doing your investors a disservice to stick to this ideological point and not participate in a good quality deal that kind of is maybe outside of the category that you want to focus on. So I'd say crypto VCs, back in the day, they could just kind of buy a bunch of Bitcoin and that was enough. Then there was a phase where, we're kind of in now, where most crypto VCs are kind of just like index funds. They're all sort of investing in the same shit. You see the same names at every deal and not that differentiated. But increasingly here and there's pockets of funds that are more focused. And that in another couple of years, that'll be the norm. It won't be enough to just be a generalist fund. The real money is in above average returns is going to be in the hands of those who can really dive deep. Also, as the size of the industry just gets bigger, there was a time where it was just too small of a space to even focus too much on one category. We're still kind of there, but that's changing quickly. So I'd say, for us, we were a much leaner team. We still are a lean team. We're sort of operating. There was this phase before Mark Andreessen started, Andreessen Horowitz, and well after he was done with his operating ventures, there's like a decade where he was just writing these 200K checks in seed and Series A deals. I think Arthur is in a similar kind of phase where we're sort of like bootstrapping a fund and writing these super angel, quote unquote, type checks in a variety of fields and just kind of learning and understanding what our niche is going to be on the fly. So we take a category at a time. When we first got started, this was November of 2022. If you look at some of the first maybe 6 months of deals that we did, they were all focused around the staking space. It was staking infrastructure. It was staking as it pertains to consumer applications. It was a major stablecoin project. Well, I shouldn't call it that. It's really a synthetic dollar that relies on this sort of staking narrative as well. That was just our thing, and we went deep. And then after that, we kind of pivoted once we felt like we had kind of capped out, and been taking one theme at a time. Now it seems a little bit bigger, and we're expanding. You kind of probably see in our portfolio page, it is chronological, so you'll see like there was a focus originally that's now become a little broader, and that is kind of basically a reflection of the fact that now we do want to get exposure in all these different spaces, and we'll double down when we find a category that's really exciting.
I see entropy in everything you guys do now. Like everything you describe, I'm like,
yeah, fair. That's true.
Yeah. Cool, man. Well, as we kind of wrap up, this has been fascinating, great conversation. Like maybe we do like a little bit of rapid fire, fun here, like a little game where, you mentioned kind of these different time horizons and then a few different categories. And so I'd love to kind of get your perspective on how sustainable some of these categories are. If you could, just rip like, let's go 1, 2, 5, 10, 50 and 100 year. Maybe that's too many. Yeah. Let's just go 2, 5, 10, 50, 100. 2, 5, 10, 50, 100. So 5 categories. Like which one do you think is a 2 year, it'll go well for the next 2 years, but then it'll die off in 2 years. Which category do you think is going to survive for 5? Which one's going to be around for 10, for 50? And then which category is going to survive for 100 years?
Yeah. Well, I think it kind of just go down the stack, right? Like starting with 100 years, store of value, simplest concept, will last centuries. Gold lasted thousands of years. Bitcoin, we'll see, at least a century. You're kind of working your way up. Smart contracts, right? That concept, like there might be evolutions and it might look different in the future, but I think that's a multi-decade bet. That's sort of like the basis of people transact in the future, and then working your way up from there. A category we're excited about for the next, like, let's say 5-10 years is the intents space. That's like, we'll see what that does for interoperability, but I think it could be game changing. We've started to do a few deals in that category. In the next couple of years, things like DeFi as it stands now, DeFi is going to look very different, especially as some of the notional dollars in the space dramatically increase. But most of the consumer-facing DeFi applications of today are not really business models that are going to last more than 2 to 5 years in their current form.
Akshat, I think this has been great, man. Yeah, I mean, I guess one last thing, if you want, feel free to, like, maybe speak to any founders or builders, that might be listening to the podcast, and who are you guys looking to fund? And if they fit that bill, if they think they fit that bill, they'll reach out.
Yeah, I think for us founders that we like to work with, usually have a few traits, and one, they're not trying to build a business model that is tried and true in one part of crypto and just copy it over to another. That tends to be an area where we might here and there write a check because there's upside opportunity, but those are not the projects where we're going to double down and be your ally and tweet about you every day and back you as a game changer for humanity. Those are the kinds of deals we prefer to invest in. And a good example would be Athena, right? That's one that we feel like genuinely could. It's an experiment, like everything in our space. Our entire space is an experiment, but it genuinely could move the needle on how money works in humanity. Some version of it, the next evolution of it, could. That's the kind of stuff we really like to back. The other thing I'd say is we do a lot of extensive background checks on founders, and integrity is the most important thing that we look at in a founder. It's more important than intellect, their ability to marshal resources. It really is integrity. So those are two things I'd say. If you're a founder, hit us up if you fit the bill on those two fronts.
Very well said. I mean, you can teach a lot. You can teach intellect, you can teach engineering, you can teach resource allocation. You can't really teach philosophical values and morality. So yeah, that's pretty innate. Akshat, I mean, absolutely banger podcast. Thank you so much for coming on, man. Where can people find you and maybe apply or learn some more?
Yeah, you can find us on Maelstrom Fund on Twitter, and myself at Akshat HK. So connect.
Awesome, man. Thanks.
All right. Thanks.